Hello class, we're going to pick up now with chapter 37 part 3, and in this part 3 we're going to look at how a partnership operation terminates. Right, either the partners break up or the law has to come in and dissolve the partnership. But prior to jumping into dissolution, we're going to take a look first at dissociation. Right, so when we have a dissociation, what's going on here is that probably it's one partner who wants to cease doing business, wants to leave the business, and the other partners want to continue. They want to continue with their business, so they will probably buy the departing partner out. Right? Now, the ease with which this can occur is basically that the partnership does not have to dissolve completely because the one partner is leaving and then reformulate completely, which is what would have to occur, I would say, before we introduce this idea of dissociation, maybe in the last 10 or 15 years, right? So it's kind of new, the idea of dissociation. Right. Now, how is this brought about, though? How does dissociation occur where we are going to continue the business? Well, it could be brought about by the one partner giving notice of their withdrawal, by the occurrence of an agreed upon event, by a unanimous vote of the other partners, if the courts are involved, an order of the court, or if the partner has filed bankruptcy, has now become mentally incapacitated, or even passes away. Those are the type of events you could look for in a scenario and be able to say that a dissociation is likely. Now, the buyout price. This is a price that is set by the partners. They may have done this earlier when they first started the partnership. It's the amount, though, that's going to be distributed to the partner as if the business wound up on that date of dissociation. So that has to be determined. And the partnership agreement may say how it will be determined, what they will look at, what the partnership will look at to do the calculation, who they might hire, retain to help set the value of the partnership interest that is now being dissociated. So it's important to think about this when you first go into a business and a partnership. We probably don't like to think about it, but it's wise to consider how it will be calculated, how the buyout will be calculated. Partnership termination, the word we use for the actual termination of the partnership when it's going to cease doing business entirely is dissolution. There are two stages when a partnership terminates. Those two stages are as follows: the dissolution and the winding up. Dissolution is the formal disbanding of the partnership and its business. It's a declaration that we are going to terminate, that the partnership is going to terminate. The winding up is the follow through on that declaration. It's a gathering of assets. It's winding up any loose ends of the business. Right. Now, how will dissolution be brought about? There are three ways. It could be done through an act of the partners. It can be done by operation of law or by a judicial decree. We're going to first take a look here at what constitutes an act of the partners. And probably you'll find more frequently some act of the partners brings about the dissolution. So if the partners make an agreement to dissolve, if one withdraws and the others follow suit, all right, they decide they don't want to continue. All right. If there's a partner that dissociates, perhaps by death, bankruptcy, some kind of incapacity, and at least half of the remaining members also want to dissolve, then that will be an act of the partners that will bring about that dissolution. Right. When we're talking about an operation of law, should the business, what they're doing, become illegal? Now that's a little hard sometimes to give you an example of, but we know that times are changing, or they do change periodically, and in our history at least, there has been acts taken by our legislature at one time to prohibit alcohol, right? And so you can imagine then anybody that was operating a distillery, anyone engaged in the sale of alcohol at the time, they all of a sudden now, when the law passed for prohibition, it became illegal to be dealing in alcohol. So this would be operation of law. That would then cause a partnership to terminate. Now, more currently, we've had some change in the law regarding marijuana. And I know that marijuana has become legal now in the last, half a dozen years. But you never know. Society may change, and we may reverse our decision on that too. So that may be another area where you might see a partnership formed, now put out of business, so to speak, because it's become illegal to operate. All right. The third way you might see a partnership terminate would be through a judicial decree. And this just means that the court's involved. It probably speaks to an underlying disagreement among the partners. They cannot reach a decision to dissolve and how to figure out what each partner is entitled to, and they end up in court litigating over this very point, how to terminate. Right? Your case gives you your book gives you a case. It's the state of Webster. In that particular case, the surviving partners refused to carry out the buy-sell agreement that they already had agreed to earlier, and so it ended up in court, and the court had to order that the partnership dissolve. As with the sole proprietorship, notice is required upon the dissolution of the partnership. And I'm going to introduce you to the idea of two types of notice here. You can have an actual notice. Actual notice would be when someone is directly informed about the termination or dissolution of the partnership. The partnership sends a letter directly to a third party that has dealt directly with the partnership to announce the dissolution. Constructive notice is indirect. An indirect notice, it might be fulfilled by publishing an advertisement, whether that's in a newspaper or online, or even a posting on the window of the office space or the store where the partnership is operated. It gives notice to anyone who is interested. That's constructive notice. All right. So notice needs to go out, whether to the other partners or to interested third parties. Lastly, the state has to be informed of the dissolution, and so a statement has to be filed with the Secretary of State's office so that the public records reflect the dissolution of the partnership. All right. We have talked briefly already about the buy-sell or buyout agreement. The two terms there, buy-sell and buyout, they are essentially interchangeable. All right. And I know it says on my screen right here, buyout or buy-sell agreement, but it could just be a provision in the partnership agreement. And so the partners have already agreed in advance to terms of the sale, who will be allowed to purchase, and how will the interest be valued. All right. All right. Right. Let's move into the second stage of the dissolution, and that would be the winding up phase. All right. In the winding up phase, just note that there's an order in which people are going to be paid from the proceeds from the partnership that is winding down, right? So here is the order in which once all the assets of the partnership have been sold, we're going to take those proceeds and distribute them. They're going to first be used to pay the third parties that are owed money, so any third party debts. Second group of people to be paid will be partners who have made loans, made advances to the partnership. So they're internal debtors, internal creditors, to the partnership. Third group of people to be paid would be the partners. They'll be returned their capital contribution, what they originally invested, and then if there are any funds remaining, those would be considered the profits on the partnership, and they will be distributed according to the capital agreement that was made. Right. So in that order, those are the groups of people that will be paid, and an accounting will be done upon termination. All right. Now, to summarize what we have looked at here regarding partnership, I've made you a one slide, and it probably gives you a good idea of things I've already said. So what are the advantages of a partnership? What's the pro side of a partnership? Well, partners have full management and control. All right. The partnership operates fairly informally. I suggest, all your lawyers will suggest, to have written documentation, but it is not required to be a legitimate partnership. And the third advantage is that the income tax is paid only by and at the individual partner's level. The overall business partnership does not pay an income tax. Disadvantages. Number one, the partnership lacks continuity to some extent. All right, the business does cease at the death of a partner, and may have to be reformed to a certain extent. All right, it's not as bad as it was, years ago, so that may not be as severe a disadvantage as it was previously. And number two, partners bear individual personal liability, though, for the partnership's debts. That would be probably the stronger of the two disadvantages. All right, so that kind of concludes this portion on termination, dissolution of a partnership. I'm going to stop the video, and I will be producing part 4 for you in a moment.